in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by TractorZoom, delivering insights. If you're looking for a great place to track what's going on in the auction marketplace, as well as see trend lines start to develop and see past history to see those trend lines kind of scroll across your screen, the best place to do that is TractorZoom's Iron Comps. So Shawn is with Hackett Financial out of Boca Raton, Florida, and Shawn is gracious enough to come on once a week to sit down and talk about what's going on in the market. So Shawn, how you been, man?
I've been really good. Been really busy. Been a lot going on the first of the year, and everyone wants to know what's going on with ag markets because we're alive again, and so we haven't had this much interest in agriculture. And we were talking yesterday. I think at least 10 years been the last time we had anything where people were actually wondering what's going on. So for what we're doing, this is a more exciting time to be talking about ag prices and weather patterns and inflation fears and disruptions and just lots going on. So
yeah, ton of stuff going on. I've been incredibly busy at work getting stuff strung together and just working with folks on trying to get the really just kind of knock the dust off of what they've got. They've kind of duct tape and baling wired it for the last 5 to 7 years, and now they're ready to do something. So it's definitely been a very busy time.
Yeah.
And to say the least, ag is awake is probably an understatement, because it's you look at what's going on right now. Soybeans have kind of had that. They kind of, I don't know how much they're off now, like 60 cents, 80 cents, something like that from.
I think at the intraday low yesterday, they actually had lost $1 from the high from a few days ago. So they had a quick dollar dump. But I mean, that's going to happen when you start getting beans in the 14s, and there's going to be setbacks along the way. It's not going to continue to go. If it keeps going straight up, it'll be $100 by by the spring. We'll plant 150 million acres. So.
Right. Yeah. Yeah. That's the other thing too. So talk about that a little bit. This volatility that we're seeing on both, kind of across the board. We've got these huge run-ups and it kind of falls off, then it comes back up and falls back off. That volatility is there, and talk about that a little bit, and kind of what, from your perspective, how much of that do you see happening here moving forward?
Well, the higher prices go, that means that you have a much greater speculative component in our markets. And because we have trillions and trillions and trillions of this liquidity, it can slosh very quickly in either direction, on a very quick sentiment shift. So all of a sudden we get some rains over the weekend and the speculators dump soybeans and it's down $1. But that's part of what makes the market bullish, is that you have money that's interested in being in and being out. The trend's up, but as you get higher, though, there is going to be some more susceptibility to either taking long positions off, and someone's going to say, well, maybe there's an opportunity to short. Maybe there's an opportunity to make some money on the short side, so that short seller comes out when he starts to see prices like soybeans getting up to where they were a decade ago. They're going to take a stab at that because maybe there's an opportunity here short term to make some money on the downside. So that's part of the speculative component. And also, when you're dealing with 130 million bushels of carryout in the U.S., which is, give or take the error that's in that number, and we really kind of don't have any, really. So small little adjustments when you're at that tight of a carryout can make a big deal on what the price of soybeans should be. If it's 120 or 140, it's the difference between maybe 14.5 beans and $13 beans, and that's. The market can change that view very, very quickly based upon any piece of information they get. So people have to recognize that the period of cheap soybeans, for example, where you could just kind of put a position on and just, wait for the big upside to come. That's behind us now. Soybeans are no longer cheap. You now have to be opportunistic. If you're a buyer, if you're a cash buyer of soybeans, to look for these periods of big breaks to kind of come in and do what you need to do,
Mm-hmm.
Same thing as a producer. You get these big swings.
Yep.
You do need to sell soybeans at some point. You just can't store it forever. You
Right.
got to sell it at some point.
Right.
So,
Yep. Okay. So one of the other aspects of this kind of market that we're headed to, and some as we look into the future, as we see what's going on, there's a lot of talk about inflation, and if inflation is something that's going to be a prevalent part of the market moving forward, which I think it's going to be, that's going to drive the price of commodities, any commodity, whether it's oil or corn or soybeans or gold or whatever it is. I mean, it's going to drive that up. So talk about inflation a little bit and how you see that affecting the market long term. Well,
there's the price that supply demand says the market should be at. Mm-hmm. So let's, for argument's sake, say that at 1.5 billion bushel carryout corn in the U.S., that we should be 5.5. And I think that's actually the fair price for corn with that kind of carryout at this moment in time. Okay, we've talked about this for a while. That's probably where we're ultimately gonna head. And so I think right now there's very little inflation in our ag markets. I think we have supply demand that got out of whack. Weather's come into the play. Demand came in, real demand, not just speculative demand. But if we really do get escalation of inflation, then what happens is if corn should be 5.5 in an inflationary environment, it's 6.5 or 7. So it adds what we call the inflation premium. So you take what the market should be at, and then you add the inflation premium on top of that. And that's what, if we really get into kind of a 10, 11, 12 inflationary scenario, or a 2006, 2007, 2008 inflationary scenario, then we could go from $5 corn to $6.5 corn with no change in the fundamentals, just a perception of increased inflation and the increased buying and the increased premium that gets put into markets when you have inflationary fears. So I don't believe we've put that on these markets yet, which is good. I mean, if you're an ag producer, I think we've just put on supply-demand factor that the market completely misread in August that we talked about. And now if we get the inflationary component, so what we think is going to happen, Casey, over the next 12 to 18 months, supply demand is going to warrant a much higher price, and inflation premium is going to be put onto that. Mm-hmm. So from where we are today, if you dial what that could mean, it's pretty wild, exciting potential for prices on the upside here. If we even half right about our weather forecast and we get these real inflation fears later on in the year into 2022, the numbers are pretty wild. What corn or soybeans could be at, when we get into the spring of 22, we got some pretty wild possibilities because of this perfect storm coming together. And if China continues to need real demand like they have been, which we think they're going to continue to need, I don't know. It's going to be a wild situation. So we really, really want to stress to producers that, you really want to be careful not to oversell. And we've been saying this, Casey, on your program for 6 months. Hold cash and grain in the bin. Don't oversell. Yes, you have to sell some, but really be keeping your top side open here. Even though we've had a big run, even though these are prices we haven't seen in a while, even though it's tempting to want to sell it all and say, I can't go wrong now. And I get all of that. But you've just experienced 10 years of terrible operating conditions where most farmers have been losing money for years. You got to make it during this time. You got to make it big during this time to get yourself back. And I wouldn't shortchange yourselves. I'll be mindful that we're in a different situation, and just keep some of your top side open. Don't give it all away. So many farmers, Casey, got caught selling so much corn and soybeans. Corn in the upper 3s and soybeans in the 9s, and they just left so much money on the table because they just were reactive and weren't mindful of what was really going on here. And I don't want them to continue to make that mistake, I guess. Mm-hmm. So
no, totally understand that. All right, so let's take one more thing. A big driver that's on tons of people's mind right now is the drought situation, not only in the U.S. but around the world. I'm looking at the U.S. drought map right now, and this one was released on January 14th, so just here at the beginning of the week. They had, if you stop and look at, obviously the West is almost moved into some, they're going to make a new color for the West here for too long. But they've got, if you take a look at, Kansas, Missouri, Illinois, Indiana, Ohio, there's a belt that kind of runs through there, a little streak that runs through there that basically the northern third of Missouri, the central third of Illinois, the northern third of Indiana, and pretty much Ohio and Michigan, that little corner where they come together at, is that drought is starting to really start to see some big concerns there. We're looking at anywhere from moderate to abnormal, and every time they put a new map out, that streak gets a little bit wider and it starts to change a different color. So a lot of things could happen between now and then, but as we've talked about here on this podcast since January of last year, we're moving into a drought cycle, and it's really starting to shape up that way. You take a look what's going on in the Black Sea regions of the world. The world drought map is more concerning than the U.S. drought map is, because there is a large portion of the world that is in some level of drought. Europe, the east, central, Eastern Europe, Eastern Asia, South America, obviously. There's just tons of things to be alerted about. So I guess talk about some driving factors you see as far as how drought is going to start playing into the minds of people. Not that it hasn't already, but you got to start thinking about, February is not that far away. March time frame is where the planters usually get drug out in the southern part of the U.S. and start moving north. So start talking about planting into a low moisture profile in the soil, and how that's going to start reacting in the marketplace.
I forget exactly what Ellen Taylor used to talk about this. That if you and I forget exactly the number, but I think I got the numbers about right. But he went that if you start the season with good subsoil moisture, abundant subsoil moisture, your chances of having a below trend line yield crop, I think, was something like maybe 20% or 15%, something like that. If you start the season with very low subsoil moisture, your chances of having a below trend line yield crop is something like 70%. Now, it doesn't tell you how much below, but if you start with the tank full, we've been starting with the tank full for 10 years, right, Casey?
Yeah,
we always start with the tank. Last year we started with the tank full, and we still came away with a crop that was okay but not great, okay?
Right.
But if you start with the tank empty, you almost can't have a top-end crop. I mean, look, we want to put that out there right here, that if we get into that planting season and we don't have subsoil moisture, you already pretty much have started with the idea that we're going to have a below trend line of crop. Then it just becomes how far below trend. So that's such an important variable that I believe we're going to be dealing with, that we're going to be going in with just nothing there. So any hot or dry period, even if it's just a week or two, if you don't have subsoil moisture, you immediately, they call them flash drought. It's a flash drought because you have nothing in the tank to get through that and keep the crop going. Whereas if you have abundant subsoil moisture, you can go through quite a while before you start drawing that subsoil moisture down and start getting into trouble. So that is the quintessential defining difference that this growing cycle is going to have versus anything we've seen since 2010, 11, 12, which is the last time we had low subsoil moisture years. And that means we are expecting below trend line yields. And if we're right about it being hot and dry for a good portion of the summer, well below trend line. Not like last year. Last year was like, moderately below trend. It was was trend line 176, 170, we had 172, a little bit below. We're talking about way below trend. Maybe something like 15 bushels to the acre, 20 bushels to the acre below trend. That'd be the kind of thing for corn we'd be looking at, something like that. So you have to kind of look at that. And by the way, that's the situation you're going to be looking at in other parts of the, in the Western Europe and Russia's looking at the same kind of subsoil moisture. So that is it's not going to go away. According to our forecast, actually, that drought map you referred to, when we look, if you look at that, when we talk here in May and you look at that drought map, it's going to continue to move like a swarm of bees. It's going to continue to move further east, further south, and you're going to see probably close to 70% of the ag ground in some form of moderate to extreme drought by May. That would be what our forecast is. And the market is not going to wait very long if it sees that. I mean, it's going to start, especially with us drawing down our excess supplies. We're already gone. I mean, those excess supplies are gone, Casey. They're gone. So there's just no tolerance for anything, but we have to have perfection this year. So although we might see some volatility and maybe some corrective period here as South America's harvest starts to happen, and harvest pressure and maybe some better weather's coming a little bit. But the big moves in markets, we believe, are still in front of us, especially as we get into the wintertime and what might be happening in the spring of 22. And we don't even think we're even close to pricing in this entire reality yet. But we're on our way. We're on our way. So feed, livestock producers, ethanol producers, people have to buy feed, cash feed and cash corn. You better buy the dip. Buy the dip. You get a break in the corn market of any sort. You need to be quickly, getting some long-term cash, cash needs met. I mean, even if you look out to the beauty of it is December 21 and December 22 are trading at huge discounts. So you can get a really attractive price for those deferred contracts for buying cash feed. You better take advantage of that, especially on any breaks. You do not want to let this situation get out of hand, and all of a sudden, you're paying some prices you simply cannot pay, and then you have to do what you really don't want to do as a livestock producer, which is liquidate your herd, or as an ethanol producer, which is shut down your plant. That's what you don't want to do. If you do the right thing, you shouldn't have to right now. So
yep. All right, so let's talk about cattle real quick. Cattle marketplace has had a few corrections earlier in the last couple of weeks where they've you saw some backward contraction, but over the last 3-4 days, you've seen some pretty good traction kind of take hold. No big, huge swings by any means, but you're starting to see some creep up. So talk about what's going on in the livestock marketplaces.
I think the cattle market, we're not wildly bullish cattle. We're worried that as feed prices escalate, that we're going to get into a herd liquidation cycle later this year, and that's going to bring extra animals onto the market, and that's going to keep the price suppressed for now. But we're not there yet, right? We're not there yet. I mean, we're not at that point yet. So we think we can have what we call a kind of a typical seasonal rally into the early spring, where buyers' demand for grilling season and all comes into play. We are looking at some lower cattle on feed numbers. That's going to mean some less animals that'll be available to the market. So we think the market can work higher. Like I said, we're not raging bulls, but we think we can have an orderly, smart rally into the spring. And then after that, we're going to be really worried because we see feed prices really escalating. Drought, you know what drought means in the where the cattle grazes in the south. That means a lot of problems for if you're Texas, or you're not going to be able to have a lot of grazing ground to feed them. And then, of course, if we get into a blisteringly nasty, ugly, cold winter, it causes even more problems. So we think it's a first half constructive story, but we would be looking for an opportunity for selling if we're a cattle producer to cast sell, in early spring, late winter, somewhere in there. We're looking for an opportunity to sell ahead of a liquidation cycle in the back half of the year.
Yep. So one thing I was meant to talk about earlier, if you look at that drought map and you look at China, Southeast Asia, in that area, it is abundantly wet. I mean, there's lots of moisture falling over there, to the extent where very, very kind of mimicking the 2019 U.S. weather patterns where we had this wet winter that kind of lasted, and then you had this summer, early or late freezes and those kind of things. Looking at something similar like that to happen, they're already coming to the table buying quite a bit of stuff. If things continue the same the same pattern that you see there, how are exports going to play into the livestock market, especially when you're talking about China?
We put out this weather outlook report. I think I sent it to you. Mm-hmm. We talk about China specifically, right? And we absolutely believe that China is heading into a kind of what we did. They're going to have a very, very wet spring, very delayed planting, very cold, late spring frosts for China, all kinds of problems for their planting season, and then they're going to turn hot and dry. And so they're going to get into a drought cycle, but they're going to have abundant subsoil moisture. Remember we talked about that?
Right.
So what does that mean? That means that the majority of the problem for their crop this coming season isn't going to really be because of the drought, because they got plenty of moisture. It's going to be because of the poor planting season. They're going to get it planted so late. They're going to have to replant. They're not going to replant everything. Acres are going to be down, and they're still not going to have a top end crop. So we don't see them getting the big abundant crop to get themselves out of their shortage. We see them having, crops below trend, disappointing crops again, and we actually think that the spring conditions for China could actually be a market moving event. They get a whole bunch of corn in the ground and soybeans in the ground, and they get a late season frost in their during spring, and they have to replant everything. Farmers there, they don't have the kind of support network that we have here, and you have a bunch of little 5-acre farmers there. You know what I'm saying, that they just won't replant. They got one shot at it, and if it doesn't happen, they're not going to replant. So they're going to have big problems, not hot, dry problems like we're going to have. They're going to have more of a really, really nasty planting season and some dry, hot weather to kind of add a little extra kicker. So what we think that means, well, first, the hog herd's going to continue to grow. They're going to need more feed next year than they need this year. Their crops aren't going to be very good, and South America is going to have less exportable supplies than they did the year before. What does that mean? They're going to need a lot more from the United States, and we're not going to have it. So that means there's not going to be enough supply for everybody. So someone's going to have to not get it. And that's what you call a demand rationing scenario, where the prices have to go where you ration certain demand. You got to close those ethanol guys down. You got to get the herd to liquidate so that they don't feed those animals anymore. I mean, that's what's going to happen. The Chinese are going to get it. They'll pay whatever it takes to get the supply, and they're going to drown out the rest of the buyers. That's how we see it, Casey. So that's why what we're trying to tell everyone today on the cash side is China already took all the cheap supplies before anyone even knew it, right? And now everyone's trying to buy more expensive supplies. They're going to do it again, and make sure you don't get caught missing getting the supplies before they come in and realize. Remember, when did they start buying all this grain? August. Why? Because that's when they realized they were totally screwed on their crop. They looked at the crop and go, "Oh my gosh, we are totally screwed!" And bam, they just went bought, and never stopped. Well, I think they're going to do the same thing. They're going to look at this. They're going to look at that poor planting season, look at all the problems they're having, and I think they're going to realize that means they're definitely not going to have a good crop no matter what happens. Because of that, I think they could come back and start upping the ante as early as June, especially if the U.S. is showing drought signs, problems with the crop, terrible crop conditions, all those things. I mean, I think they're going to be aggressive. You look at those deferred December 21 corn prices, I think they're going to just eat that up alive as soon as they get that first inkling that their crop's not going to be there. So this could happen very rapidly. I don't think we wait till August on this one for them. I think they could come in June and say, U.S., what are you willing to sell us?
Right. Yep. Nice thing about the Chinese, though, it's pretty easy to tell what they're doing because they'll come out and say, I'm sure in June, that they've got just record amount of emergence and crops are amazing. At the meantime, they're just got ship after ship after ship after ship leaving the U.S. and South America full of corn.
Everything's great.
Oh, it's gumdrops and candy canes, baby.
And they bought half the corn crop. Why'd you do it? Yeah, just it just felt like the right thing to do.
Yeah, if we had to refill our strategic supplies,
Well, the old adage is don't do what don't follow what the China says. Follow what they do.
Yeah.
What they do is the true vote. What they say is nothing but pure public, dramatic propaganda.
Yep.
And that's all it is.
That's exactly what it is.
The virus is fine. We have no problem with the virus.
Yeah. Things are good.
No problem. Yet they're shut down in northern China. Now we're good. We're good.
Yeah, it's just a precaution.
Just a precaution. We're fine. Totally fine.
All right, good stuff, Shawn. People want to reach out to you, get some more information about Hackett Financial and what it is that you guys do there and how you can help someone's operation or just their investment needs. What's the best way to get a hold of you?
Our website is Hackett, Hackett, advisors.com. If anybody wanted to see that report that we put out, our Outlook report, we went over the weather in China, South America, the U.S., and went over a pretty detailed look at that and what it might mean. Shoot us an email at Shawn, SHAWN, at HackettAdvisors.com. We're glad to send it to them. We also did a Real Vision interview, an hour-long interview last week that we went over this in more of a Q&A form with them. And we have a link that we can send them to if they want to see it. I sent it to you as well, Casey.
Yeah, I just saw it pop up as we started talking.
Yeah, so if you're into watching an hour of interview, which is but it's kind of a Q&A and goes over all this in more of a back and forth action. It's a really important time to get clear about what we're at, so you can make the right decisions about how you handle your cash buying, how you handle your cash selling, and you get your hand around how you want to manage this, because you don't want to screw this up. This is very important to get this right now. We're in the heat of the matter. We're in the thick of things. When we do your
Moving Iron Summit.
The summit here in September, this is a really, really important year to get your hands around this weather situation right and make the right decisions. It could be exceedingly prosperous if you do it right. It could be exceedingly disappointing if you don't. So we will do anything we can to help. This is that's what we're here to do, and it's just too important to mess up right now.
Yep.
So
a million things kind of headed our way, and there's all of them are big swings one way or the other. So it's a very pivotal time here when you start looking at what's going on.
But the positive thing is, I guess, the overreaching thing, Casey. We're entering a much more a positive phase for agriculture as a whole, whether it's equipment, whether it's fertilizer, whether it's seed, whether it's the farmer himself. Everyone, the ag food chain is finally going to get some capital back in it, and so this is an exciting time and a time where the value of agriculture is coming back. And the value of food is coming back, and people realize that you can't eat your iPhone for breakfast; it won't feed you. That won't print
shocking.
corn.
Yeah, it's shocking. So. Yeah, yeah. All right, Shawn, good stuff as usual, man. Shawn and I did a report with Dr. Valentina Zarkova, and look for that to come out here first part or towards the end of this week. First part of next week, I'll have it all kind of chopped up and put into different pieces. Some of you are going to have. It really correlates well with what Shawn's talking about when it comes to the weather. She really lays out. She's one of the top scientists that are studying, how grand solar minimums and lack of solar activity plays effect on the Earth's weather. So we're going to start seeing some transitionary things here. So it's going to be I learned a lot, right? And that's saying something if I learned something from somebody. So just keep that in mind. So
she was amazing, and she was absolutely. I learned. I know a lot about this stuff, and I learned a ton of stuff that I never knew because she knows it at a level. Obviously, because she's a scientist. She understands at a level that I was blown away. I hope your listeners listen in on it. It was really, really fantastic. I was really excited about it. So
it's really good stuff. So. Well, with that, Shawn, like Shawn talked about, Moving Iron Summit's coming up here in September 15th through the 17th. It was supposed to be here in January, but some COVID restrictions stuff that we saw come down just couldn't make it happen in January. So, Shawn, actually, it's going to be a great time for Shawn to be talking about what's going on, as he talked about earlier. So, if you're interested in coming to that, check out MovingIronLLC.com. You can go there, revamp the whole website, and a lot of a lot of easy ways to see what's going on there. But check out the hotel registration as well as the agenda, and you can get all the information about what's there. If you want to learn more about Shawn, go to the Moving Iron Podcast website there and go to podcasts and go to the market report segment, and you can see a nice picture of Shawn and his background and what he's been doing with his life there, so you can get more information about what's going on there. So check out Moving Iron Podcast on Facebook, Twitter, and Instagram. That's where you're going to find the latest information as these podcasts come out. Also, check out the Global Ag Network and the great podcasters out there as well. So with that, I am Casey Seymour, Shawn Hackett. Let's go with some iron, folks. Out.
Moving iron in the 21st century.